This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. This is the first full 5-day working week after many. We're not used to it, but we'll try and manage and pull through. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning. And this is also a week when you have Reliance that comes out of its earnings on Friday evening at 8 p.m.
Aren't Fridays a holiday, Sonia?
We're so used to it, right?
So it's rather a full week, right? I mean, but it was hard. It was hard for so many long weekends to finally come in on Monday and say, okay, guys,
I think
Monday
Nigel has some good
Friday.
news, Nigel.
No, we'll pull through this one. We need to pull through the next, and then we have another truncated weekend. So 2 full weeks, and then
First May, right?
we're back to what we're used to.
And 1st May is a good one. I mean, it's Labor Day.
Exactly.
So, yeah. So you deserve it.
So Labour gets some rest, right? So anyway, let's just quickly run you through what you need to know before we move any further. We are reacting to 2 days' worth of change as far as the global markets are concerned. The S&P, the Nasdaq, and the dollar index are on your screen. Thursday was good for Wall Street. Friday, we saw some pullback. So adjusted net, the changes on your screen. 1.1 higher on the S&P, 1.6 higher on the Nasdaq. And the dollar index is absolutely flat. I mean, Thursday and Friday kind of nullified each other. So the backdrop is positive in that sense. I mean, it's not bad at all, the global backdrop, that is. The problem is that we've got a bunch of earnings to deal with, which were not all that great. Infosys reported numbers on Thursday after market hours, and numbers disappointed. This is going to be a big topic of discussion through the course of the next 2.5 hours or so. The ADR cumulatively over Thursday and Friday sold off 11.2%. Now, Infosys has around a 7% weight in the Nifty. That's a large weight for a single stock. And presumably, it will start with a large cut this morning as we open. And that perhaps is going to be the big drag that you need to watch out for the Nifty itself. I'll get to the SGX and what it is indicative of in just a bit. But the Nifty by itself, right, has been up for 9 days in a row. So it's been uninterrupted gains. Even on Thursday, when it looked like the market's going to pull back, see that eventual kind of exhaustion and maybe consolidate, we ended higher. The Nifty, I mean, there was a sharp recovery from the day's low. The immediate resistance then in that sense for the Nifty becomes the 50% retracement of the entire fall from the all-time high. That stands at 17,858. That's about 25 points away from where we are right now. That's the immediate resistance. Only on a decisive close above the 17,858 level, we get to the next important retracement, which is the 61.8% retracement. That stands at 18,100. But I think on a day like today, with what the SGX is indicating, etc., what one needs to watch is also support levels. On the downside, the support for the Nifty comes in at 17,650. That's the number that the market needs to defend. Now, Bank Nifty also saw follow-up buying on Thursday. Out of the Nifty and the Bank Nifty more recently, Bank Nifty has been the stronger of the two indices. It's already, by the way, above the 61.8% retracement. The Nifty is not even at 50, but the Bank Nifty is above the 61.8% retracement of its entire fall. That level is 42,036. So for the Bank Nifty, a defense of this number becomes important. That's the first level to watch out for. And then you've got 41,280, which is the next support, which perhaps will need to be held as we open this morning and go into the next couple of weeks, next couple of days as well. The SGX will come up on your screen. It's indicative of about a 90-odd point fall, which will take us to about 17,780. That would still leave you in a pretty good place after the 1,000-point rally that we've had, in the last 2 weeks or so, 2.5 odd weeks or so. So only, another 100 points from where the opening is being indicative by the SGX, I think you'd need to start to worry, which is, that 17,650 kind of levels, which I think we'll see if we need to get to and talk about those kind of numbers. The uptrend has been very, very nice. And as we've been saying towards the end of last week as well, maybe, you need to just pause a little bit, catch your breath before you decide on the next move. It's been a full 1,000-point move, 3,000-point move on the Bank Nifty from the lows that we saw just 2.5 weeks back or so. Infosys does no good for the market. HDFC Bank also, by the way, has not really done or is not pulling its weight because of the numbers which are not subpar but largely in line with expectations. Sonia.
Oh, absolutely. I mean, even adjusted, right? If you think of it, SGX Nifty is now down about 100 points. So the start is definitely going to be quite weak. And it's two reasons, right? The weak earnings from Infosys and weak global cues, which are going to have their bearings on the market. And that's the big question that everyone's asking. If companies like Infosys and TCS are reporting these kind of subdued numbers when the economy is still okay, what happens when the US markets go into a recession? At that time, does it get worse from here? So this lack of visibility is something that has caused multiple downgrades post-Infosys earnings. Nomura, CLSA, you name it, have cut their target prices, cut their earnings estimates. So that's definitely going to be a drag on the market. Also, the guidance for FY24. So it's the first instance of a tech company giving us, of course, Infi and TCS giving us a sign of what FY24 could look like for the industry. And it's just a 4 to 7% growth that we're staring at. So that's something that could drag the entire sector down with it. In fact, there are downgrades on Tech Mahindra as well this morning from the likes of Citi. We'll talk about that in greater detail. Apart from that, the global macros are not looking too good either. The retail sales data didn't look so good. In fact, it declined by 1% last month in the US compared to an expectation of a 0.5% decline. So that sort of dragged down the US markets with it. For our own markets, though, something that the street could perhaps latch on to is HDFC Bank's numbers. They were a decent set of numbers, no great complaints. Of course, little niggling worry here and there, but largely the numbers are intact. The net interest income growth of about 24%. Retail loan growth was very strong, almost a 30% growth. So that's something that the street may perhaps latch on to, the bulls may latch on to. It's a big week of earnings. In fact, it's a big fortnight of earnings. You have Reliance Industries on Friday, of ICICI Bank on Saturday. Next week, you have a lot of auto numbers coming out. There's Bajaj Auto, Maruti, etc. So all eyes will be on that. And for our own markets, right? I mean, Nigel will talk about that in greater detail, but it's been gains that the market has seen for 3 consecutive weeks. And FIs have been buying in the cash markets for 10 days now. So the question is, do we pause here because of weak earnings from the tech majors as well as weak global cues? And does that dip get bought? Because the market has been on an uptrend. But does it uptrend see a bit of a pause? Time will tell. Of course, IT earnings would be top of mind.
Well, that's right. Can the Nifty make it 10 sessions in a row? Remember, we have not seen this all the way since October 2020. Our digital team, we have Hormuz, who had put out that alert the other day as well. So that's going to be the big question. Now, you look at the Nifty futures and the SGX Nifty, because you'll be wondering why we are saying that we're going to see a pullback of around 80 to around 100 points, because you compare both of them. And that 100-point downtick will be bang in line with the lows that we saw on Thursday. So let's see whether or not that dip gets bought into. The big question today is the buy on dips thesis. That's going to get tested. It's played out very, very well. But today that gets tested, and you have 2 large names, Infosys and HDFC Bank. Both of them will react to its numbers. We're talking about 16% weightage on the Nifty that reacts to its numbers. The FIs, they have been showing us the money since March 27. They seem to have turned the corner. And for 10 straight sessions, they have been buying in there. The FIs, well, on the index futures, well, the long positioning was up by close to 5,000 contracts. They covered close to 8,000 short contracts. And just take a look at it, the net short contracts. I'm talking about the shorts minus the long positions. From more than 1 lakh contracts, that's come down to less than 30,000 contracts. So in a span of 5 sessions, you have the FI net short positions that come down to a third. That's telling you the kind of ferocity in terms of short covering that we have seen out there. On the options data, the 17,800 put, well, that added close to around 30 lakh shares. Now, that's a sizable number, actually, because effectively the open interest went up by close to around 3 times. From around 15 lakh, it went close to around 45 lakh odd. So aggressive writing is what we're seeing out there. And just plugging in that number, well, we have our first support level at around the 17,710. I say that because of the writing we saw at around the 17,800 put. And the 17,730, that's the low that we saw on Thursday itself. If that level gets break or that range gets broken, then we're looking at support zone of around 17,550. The 50 and the 200 DMA comes in at that level. And on the upside, the 100 DMA, that remains elusive, at least as of now. The Nifty Bank as well saw a good amount of open interest build up, and there was writing being seen at around that 42,000 put in an uptrending market. So effectively, the open interest out there went up by close to around 20 times. Since we're seeing writing out there, the 100 DMA becomes very, very important, because on an average, the premium out there would be around 300 rupees odd for a 42,000 put. So 41,700 becomes crucial. SGX Nifty is suggesting a bit of a downtick. The buy on dips thesis gets tested, and let's see whether or not we can recover at some point of time from this 80 to around 100-point downtick.
Okay, looks a bit tough, right? Given that you have so many big earnings this week as well, and there could be a lot of negative surprises too. But give and take everything, this market has done quite well for itself. I mean, it's up over 5% from the lows that we saw in the month of March. But lots to talk about. It's a full week, lots of cues as well. So let's kickstart very quickly with a view coming in from Chetan Seth of Nomura, who says that softer US data in the months ahead is a risk for stocks. However, the exact timing of the slowdown is clearly uncertain. So long as the US data continues to hold up, stocks are likely to be well behaved. They, however, do not expect a meaningful decline in Asian stocks in their base case. And if there is any weakness in Asian stocks due to US recession concerns, it will be an opportunity for investors to raise exposure. In India, Nomura has removed Infosys after results disappointment and analyst downgrades and replaced it with a mix of relatively defensive names like IGL, HUL and Bharti Airtel. They've also replaced Sona BLW with Uno Minda.
Well, get you some money market views as well. This is B. Prasanna of ICICI Bank, who says that the dollar weakened throughout the previous week on softer inflation and retail sales data, but staged a recovery and consolidated towards the end owing to better consumer sentiment. The rupee, meanwhile, has an appreciation bias, aided by a soft dollar outlook, improved balance of payment outlook, exporter hedging and capital inflows. Prasanna says that the RBI is likely to smoothen any volatility. He expects the dollar INR pair to trade in the 81.40 to 82.40 level. That's the range that he expects this week.
All right, and on the bonds, B. Prasanna of ICICI Bank says global yields drifted higher as central banks continue to retrade higher for longer theme. Despite growth data coming in on the softer side, domestic yields got support from positive inflation print amid supply pressures resulting in range-bound movements. Prasanna expects the bond market to trade sideways as there are no events lined up, and the 10-year bond yield is expected to trade in a range of 7.10 to 7.3% today.
Well, that's how trade setup is, equity calls as well as money market calls. But we have a lot of stock-specific action that we're going to be tracking for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at HDFC Bank, Network 18, TV 18 broadcast. You have Zee Entertainment, Max Healthcare, Adani Green, Bartek Barbag, Sartha Energy. They are stocks on the back of positive news flow. While the big boy, Infosys, that's going to be dragging the index today. That's expected to open up with a deep downtick. And GTPL Hathway, that's the other one that could be reacting to its results as well.